Hello, my name is Michael Salmony, and I'd like to welcome you to another episode where we talk to interesting people around fintech and open banking. And today I'm very happy to meet with Jan from Tink, where we want to talk about the EU identity wallet and how that connects to payments and SCA and open banking. So welcome, Jan. Can you tell us a little bit what this interconnection might be about?
Sure thing, Michael. First off, thank you so much for having me on the call. I love the ETPPA video series, so excited to contribute. The digital identity regulation that's coming up will really provide a really exciting next step for open banking. As some of you who are watching this right now may have heard, the identity regulation will introduce so-called digital identity wallets, which can be used for strong customer authentication. And I think this is going to remove many of the challenges that third-party providers have in the market today.
So can I just understand that? The way I'm thinking of the identity wallet is going to be another app on my phone, which will contain whether I've had a COVID vaccination, my academic credentials, my bank account. And then if I want to initiate an open banking payment, it would reroute to this wallet where I would do the SCA. Is that roughly right?
Yeah, that's actually, that's it and more. So I think most of the wallets that you will see in the market are going to be bound to a device. So that's going to be an app-based identity wallet, but there's no restriction there necessarily. I believe that there will also be space for cloud wallets, meaning that potentially even your browser could become an identity wallet if, of course, it can get certified by one of the member states to provide such identity services. And then in terms of what it can do in terms of storing, it's not just, I guess, your credentials. But theoretically, it can start to allow you to federate any type of personal data with a relying party. So if you want to do a qualified signature, or if you indeed want to show your vaccination QR code, or identify yourself towards the authorities with your digital identity.
That's really interesting. But the key thing seems to be that I'm not rerouted to my bank as I am now to do the SCA, but I'm rerouted to this wallet. Now, the data in the wallet will come from the bank, whether I have the balance and everything, presumably, but it does sort of take the bank slightly out of the circuit. Is this a good thing, a bad thing? What are the consequences of that?
So that's not entirely true. So first of all, with PSD2, it is clear that the regulation says that the bank must enforce the strong customer authentication, right? And so before a bank can do a strong customer authentication, it must first onboard an identity wallet where it can store a verifiable presentation, basically a token that it can check whether or not the user is who he says he or she is. So in this scenario, the way that the wallets are designed, it is still actually the bank who is performing the authentication, but the authentication device is issued by a third party that is certified by a member state. And in order to make sure that third party has not been is still certified, there will be so-called trusted list providers that banks can check with on an ongoing basis to make sure that those wallet providers are still within scope of the regulation. But the point here is it's not actually the wallet provider that does the SCA. It is actually still the bank that checks the proof of the credential that is stored within the wallet for the SCA.
That's an important clarification. Yes, absolutely. And the security of the system is still guaranteed with these QTSPs and everything. So that all sounds good. The thing where I'm sort of slightly confused is there seem to be now several ways of doing the SCA. I can either have it done at my bank directly or via one or more of my wallets. Isn't this sort of confusing for the consumer? Does this not mean extra cost for the banks? Isn't that increase the complexity of the system? What's the advantage of this?
Yeah. So maybe initially, many banks will react in a way where they think, oh, well, actually, these are more compliance costs. This is going to cost us more money. But the reality is that actually with the enforcement of the RTS for SEA, many banks have underestimated how costly it can be to hold and manage their own strong customer authentication mechanisms. By relying on digital identity wallets, basically banks who believe that it is not their core competence to run authentication mechanisms can start to basically accept these, because inherently every citizen will receive in a digital identity wallet through their government. And banks can start to rely on these mechanisms as a way for users to access their bank accounts online or for the initiation of payments. So there will be this opportunity to see cost reductions for banks in it by itself, and with the promise of course, increasing customer satisfaction, because many customers have, over the last couple of years, indicated their dissatisfaction, of course, with the complications of using a two-factor authentication mechanism for the access to data or the initiation of payments.
You've raised two really interesting topics there. I mean, one is there's an advantage for banks that they're basically outsourcing a bit of their security to this wallet. I mean, I would still question whether all would be ready to do that, since they're liable in the end. Do they have enough trust in the wallet and all the other bits and pieces? But there is an opportunity there, absolutely. It's also for the user that they have sort of one single point where they do all this kind of stuff. They verify their COVID, their health, their academic, their banking. Everything is in one place, except and not sort of spread out all over the electronic ecosystem. So I get that. But are you seeing several wallets being adopted then in each country, or will there only be one, and will they be mandated to the user and to the banks, or can the banks choose where they do their SCA? Can you give us a bit of an insight on that?
Yeah, so I'm actually expecting to find that in every member state, EU member state, there will be one or more digital identity wallets that will emerge for such purposes, right? And in fact, it wouldn't surprise me if we start to see large incumbent banks repurpose their own mobile banking apps as digital identity wallets, where theoretically you can start to initiate payments at a different bank or request a new account at a different bank using your basically the bank that was passed down to you from your parents, right? So basically creating that loyalty and that the customer relationship that a lot of banks have been missing in the digital era. So actually, there's going to be a lot of opportunities for banks to capitalize off of the opportunity to introduce their own wallets, while also accepting alternative wallets for access to accounts and the initiation of payments. So I think you're going to see this as an entirely new market emerging, and mainly to cater to the digital experience of the consumer and the citizen.
That's a completely new angle. So that opens a whole new business avenue for banks, right? That they become sort of security providers, as it were, not only for their own, but sort of for what. And if you think of embedded banking and other things where we get more and more cross connection, that the banks may end up playing a different role in the future because of this development.
Absolutely. Arguably, it's one of the missing steps in the embedded finance movement, right? So many have spoken about, Tink back in the day, we're talking about money on autopilot. And money on autopilot has been mainly restricted to merchant-initiated payments, which are completely out of scope of strong customer authentication. What if the digital identity wallets can start to merge the federation of digital identity in combination with digital signatures and SCA? You can basically cut across all of these many important components in a value chain when it comes to the access to credit, when it comes to the initiation of payments, and or basically requesting a new insurance when you go to a car dealership, right? Or when you go to a car rental service. The entire value chain as a result can be digitized. And I think that is one of the most interesting opportunities and missing bricks that embedded finance was lacking.
That's absolutely amazing. The mind boggles when one starts to begin thinking in that direction. Thank you so much, Jan. I'm afraid our time is up, but that you've offered us more interesting insights in 10 minutes than I've heard in many a time. Thank you very much for this to you, and thanks very much to everybody who's watching this channel. I hope you enjoyed it, and look forward to seeing you on another episode.